the breadth of products that we offer really led to a number of different volume records across the board, which was great. So if one thing wasn't performing, the next thing kind of stood up. We've continued to see a lot of growth in our large open interest holders as we've gone out there to really approach new participants, as well as push the value proposition around listed futures. And a lot of talk certainly around capital efficiencies and what clearinghouses can do to bring more to bear on that particular challenge that's facing the industry. And so from that side, we've been able to successfully reduce trillions of dollars in notional through our compression solutions. So that has come a long way as well. And certainly product innovation was definitely a highlight for us in 2017. Getting the Russell back was huge, yeah. So we launched that in July. And, in February, we were at 162,000 in average daily volume. And so to grow both, the number of participants, we're seeing about 14,000 unique participants that are in that marketplace. And I think for us and our clients, the story has been, having all of the equity index products on the same platform, the margin efficiencies that we're able to offer, the offsets are over 80% between Russell and our other equity index futures complex. It makes it very compelling. And so that has been, it was the largest sales campaign that we ever introduced. And, just starting to see, more and more growth there. Certainly liquidity was a key part of that. And then bringing the buy side to that marketplace has been a great thing for us. So certainly one of the 2017 product launch highlights. Well, I'd say the other thing that certainly was a, well-watched part of 2017 and already into 2018 is Bitcoin futures. So for us, it was a really great project to work on, and it still continues to be really an exchange-wide effort. It was a client-driven initiative, and it really came down to people wanting to get exposure to this marketplace, but doing it on a regulated marketplace where they could have price transparency, they could have price discovery and risk transfer. And we're pleased with where things are at. We launched December 18th. Here we are. It's the beginning of March. We're trading about 1,500 contracts a day, which is about 80 million notional. Just put in place a brand new market maker program, and already have seen some days of more than 200 million traded. So this is going to take some time. I would say it is definitely a new asset class for people to get their heads around. But for us, this is risk management. This is just what we do. And, when we compare it to other underlying instruments, it's not the most volatile that we've ever seen. It's just, I think, more the unknown. And so really kind of working with our clients and our firms to help them understand really all of the risk and controls that we have in place for this product, and educating the institutional client base, which is really our target audience for this product. We are very excited about a number of the new product innovations that are coming out of the gate this year. So the SOFR futures in particular, we have been actively involved with the Alternative Reference Rate Committee now for over 2 years. And I think they've taken a very thoughtful approach to saying, how can we create a better, alternative rate out there? And really, I think, sought a lot of input from market participants and market infrastructure providers like ourselves, and have been, very deliberate about the process and the approach. And, I think we're excited to finally have the launch upon us, because we've been working for so many months and years behind the scene with this. So May 7th is the big date where that will be introduced. I think there's still concern about the leverage ratio, how that calculation works. It was put in place to be a risk-based capital requirement, and instead it's kind of become this binding constraint. And unfortunately, I think that can just lead to, the creation of incentives for banks to be actually adding risk to the system instead of reducing risk. And so we, are highly supportive of seeing some change in that regard, along with a lot of our clients. And so I think that's one thing on the horizon that hopefully will change.